Hi everyone, this is Terence Tan. I'm Possible Investor over here. I just want to present a quick market update for all of you as we come off a US market trading holiday yesterday. So there was no trading in yesterday's market and we kind of hit a new high on last Friday's market trading as well. So what is it you need to look out for? What exactly do you need to do, all right, before you go long or continue to trade long in this market? All right, now I'm sure many of you have heard that in a trending market over here, all right, it is always good to follow the trend, which is the strong gets stronger right now. So many of you are actually trading strong trending stocks over here. But do make sure, as my title for today's video over here goes, go long with your pants on, all right, because market can change anytime right now. There's still a lot of risk present in the market that you may or may not be aware of, but you should know about, which actually means that market can turn at any moment, all right, and we may actually see a swift move downwards, which means if you're not prepared for it while you're trying to get greedy, it's nothing wrong to be greedy in this market, all right, but you do make sure that while you're being greedy out there, you're also prepared, all right, for when things changes right now, and that's how you should behave when markets are kind of at their peak over here. Yeah, all right, there's a lot of money to be made, but make sure you know how you're making them and how you want to protect yourself while you go and chase those profits over here. All right, now, so let's go over to my slides over here and I'll cover the concerns that you should be aware about and what you should know before you place your next trades in the market over here. All right, let's go over to the slides. All right, welcome back to Go Along with Your Pants On over here. Now, so in this video, I'm just going to cover some of the concerns that you must know about in the markets before you go ahead right now trading in the markets. Now, so let's take a look at the SPX, which is actually the S&P 500 index. So as you can see over here on Thursday and Friday last week, the market actually hit a new high before retracing a little bit to close the week near the highs over here. All right, now, so that bodes well for the market because it made a quick dip on the onset of coronavirus, and then it quickly recovered within a week, all right, and followed through strongly last week over here with the tech rally and the financial stocks staying strong. All right, now, but there are actually a lot of underlying concerns that you should be aware about that is brewing under the market radar right now as the big fangs and the trillion-dollar stocks are surging forward. All right, now, so this is the market peak right now. So market's next target will be to break that point, or we may actually see a fall off from where market has hit the peak right now. Now, so the main concern right now is if markets are going to fall off, we could actually see it fall all the way back towards the 3250 50-day moving average, or actually somewhere in between there, which is 3225, which is where the market went down to the last time it went down swiftly. Now, but the main concern is this. If you are familiar with the US markets, you should know and be aware of this thing called volatility. All right, it's meant the volatility index, or commonly known as the VIX over here. All right, now VIX is just a ratio of the number of put options and the number of call options that are being traded in the market. So the bigger the number of put options that are traded versus the call options, then markets are actually very bearish. There's a lot of risk and concern is in the market, so the volatility index will show a spike in the value that it shows and represents. But if there are more call options that are being traded and bought as compared to the number of puts in the market, that's where we actually see the volatility will actually drop off. Now, so as we see the last time around where markets were hitting their at the end of 2019 and also towards the beginning of 2020 in January, markets and volatility was actually hitting a rock bottom at around 12 over here. All right, but of course we had that quick correction which bumped volatility very quickly to 20. All right, and of course the reversal in the S&P going back upwards strongly actually brought volatility down. But the interesting thing now is this. As I mentioned just earlier in my previous slide, market has hit a new high. All right, now market has hit a new high, so we should actually see the complacency level in the market players, all right, hitting a new low instead, which is just opposite of reactions that we should be seeing and getting. But this is where we call a little bit of divergence in thoughts or divergence in thinking, where market players are actually fearing a little bit in this new market highs that we're seeing right now, right? Because the volatility, yes, it did drop off over here, but it is nowhere near the previous low, all right, when the last time the market created a new high back towards the end of last year and beginning of this year. So this, yes, while the tech rally has brought along with it new optimism, but deep down inside, market players are still pricing in some risk over here of a sudden turnaround of events. Now, another thing that concerns me over here is really this, the bond prices. All right, I'm just looking at the 20-year Treasury bond ETF over here, which is TLT. All right, it has remained high. All right, and bond prices remaining high over here is also painting the same story as bonds are safe assets over here. So if people are buying into them, that means people are preparing over here to be on the defense. All right, people are being defensive over here, trying to load up on bonds and things that are going on. All right, now on top of that, there are actually a slew of economic situations you need to be aware of as well. All right, going into markets today because the coronavirus effect, yes, it's gone, it's happened. Many people think the effect is already priced in. No, it has not. All right, because companies now have effectively done what we call put a number, all right, to the damage that they may actually see in terms of this virus being hit. All right, and in the markets is always a place about expectations. So when certain companies put a number in terms of how much damage they're preparing for this virus effect, it kind of appeases investors and make them less worried and less concerned. But if these numbers that they're setting aside, all right, it's actually going to be accurate enough, or it's like if the coronavirus effect is going to be more full blown, all right, and hit companies on a more drastic level, all right, then the reaction may actually come, all right, when those numbers are being declared officially. Yeah, all right now. So we may have yet to see the full effect of coronavirus on the economy, all right, not just in China itself, but on a global scale. All right, because one thing we have definitely seen is a lot of businesses are seeing impacts, all right, and being hit because many of them are doing a lot of business in China or out of China right now. All right, because even trying to get goods produced in China right now is going to hit a snag because nothing gets out of China right now with the shutdown that is going on within the country. A lot of factories are still not in full operation, so a lot of things are being held back, a lot of things are being delayed. All right, and all this hits companies on a global scale over here. Now, next, all right, while the markets are hitting a new high, it is not the same worldwide. The picture is not the same, all right, because Europe economy has actually been slowing down. All right, Europe markets have hit a new high too, but market is just in an irrational phase right now. All right, we may call it the last hurrah. We don't know. It may even go higher, but market is just not making any sense right now. So while you're trading, make sure you have to make sense of things that are not making sense in the market out there. I'm not I'm not sure if it sounds right as well, but this is what you need to do. All right, because when people are not talking sense to you, you have to be the one that remains sensible so that you make sure you don't lose your pants. All right, now, so Europe is on what we call a fallout over here. All right, I'll show you some articles that have hit the market today on Tuesday over here, where I'm doing this recording right now on 18th of Feb, before markets open in the US in the evening over here. So interest rate inversions are also happening right now because the short-term interest rates right now are actually doing what we call the long-term interest rates. All right, and this is called the inversion of yield curve. All right, and this brings about a lot of inflationary concerns, and of course, concerns are never good when it comes to the markets over here because it hit bonds prices and then it will flow over to the equity markets immediately after that. Now, again, like I've shown you just now, the VIX is still higher than what it is the last time market hits a new high. So that actually shows that volatility is also present in the markets over here. So yes, while the trend may get stronger, the strong get stronger, the stronger stocks get stronger. So you want to make money, you want to chase after those stocks as they hit their support and resistance level, support levels as you want to catch those bounces off it. All right, but do make sure you have your risk control when you're going into the markets out there. All right, yes, and I'm Possible Investors as a community, we're still taking on new trades over here. All right, but the unique feature of what we do over here is we go into every trade, all right, knowing exactly how we cap our losses, how we control our losses, and when the markets do turn, the markets do get ugly over here, our proprietary repair trade system over here allows us to capitalize on it and actually make a repair recovery on trades that have gone wrong on us, all right, where we have managed to cap those losses, all right, and actually turn around and make a profit very quickly after that. Right now. So this is all I want to put up to all of you before the market reopens over here on a break. I've said over here, I wanted to show you something. All right, just today's market, today's news over here, you could see stocks over here in Europe are seeing lower. Apple is starting to put a number in terms of the effect that coronavirus may bring to it as a company. All right, HSBC has also announced some negative news over here. All right, shared assets worth 100 billion, which is a lot of money to a bank. All right, that's already not doing too well. About to slash another 35,000 jobs over the next 3 years. Now, Apple has warned sales will fall short, all right, due to coronavirus effects. All right, even new car sales are down, all right, for European car manufacturers over here in the month of January. All right, so all these bad or negative market news are slowly coming out into the markets. All right, and we never know when enough of this is going to spook the market and bring about the next wave downwards that we may see over here. Once the tech sector starts to roll over and fall over in the market itself, and all you need is a move coupled downwards together with the financial stocks, the banking stocks, and we may actually see another quick move downwards in the market over here. All right, now, so again, be prepared, beware. All right, as you trade the markets over here, we make things happen over here in our community of Impossible Investor Makers. If you'd like to know more about how you can secure your investments and actually create, up to 30% per annum and, higher than that on a per annum basis, do find out when we're gonna do our next free introduction session in a country near you. We're currently operating in Singapore, Malaysia, and Thailand. All right, so I do hope to meet you at one of those sessions soon. Do take note of my other social platforms over here. You could follow me on those platforms where I post regular content on them, and to let you get to know more about me as well and how I trade the markets. Thank you for watching this video. If you have not already done so, click on the red subscribe button that you see below this video over here so that you make sure you do not miss out on any other content that I'm putting up on YouTube channel over here. All right, thank you very much for your time over here, and I'll catch you in my next market updates or trade ideas. All right, have a pleasant day ahead. Good trading and happy trading, everyone.